Well, despite some bumps in the road on Wednesday, the positive momentum from the start of the week persisted, and today we saw all the indices, the S&P 500, the Nasdaq, the Russell, all close at fresh all-time highs. The catalyst? It was better than expected CPI data that rolled out as an exception to the data blackout that we've had due to the US government shutdown. Now, this comes just 5 days before the next FOMC interest rate decision on October 29th, and the low number gives the Fed the cover that they need to ease without spooking markets. How absolutely perfect for them. Now, I'm not saying I'm not happy for this print, but I also think that the numbers that we see come out of the BLS are about as reliable as Enron's books were back in the day. We're kind of mirroring a 1998 to 2000 style market, so I feel like it's time to bring back the Enron reference. Anyway, the week closed strong, and unless Trump also breaks up with China like he did with Canada last night, we are really setting the stage for a strong November. We've got lots of great setups to look at, so let's dive right into the charts to review stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a good week. Man, it was nice to see a more settled week with less volatility and markets starting to regain their footing. Now, before we dive in, likes, comments, and subscribes, they're very much appreciated. They make me feel all warm and fuzzy inside, so thank you for the support. Also, if you are new here, welcome. We normally review the macro at the start, and then we get into the charts, but today there are so many good setups to discuss that I mostly want to focus on the charts to get us ready for that positive seasonality that we are expecting in November. Since we just had a pullback and are starting to recover, now is the time to pay attention for your entries, and I want you all to be ready going into next week. That said, if you do have any chart requests for assets you would like to see analyzed, you can always leave those in the comments below, and I will get to those in the next video. Or I do have a monthly free chart chat Zoom call tomorrow, Saturday afternoon, that still has a few seats available. So if that is something that you would be keen to join, there is a Calendly link to sign up that I will put in the description below. And I would love to see you in there if you can snag one of those last seats. So let's get right into the charts to focus on the important setups for the week ahead. Okay, starting here on the S&P 500 on the 1 hour chart, just so we can really see the story of the last 2 weeks. And we had our previous all-time highs here, and I have this range delineated by the white line because of the previous zone that we broke out from at 67.50. So obviously when the whole China tariff misunderstanding kicked off, we dropped down, and I've been noting these events for the Patreon group just to see how the markets climb the wall of worry, one event after another. Regional bank credit crisis was something else added on to the China tariff situation, but you can see how the reaction becomes more and more muted. So this is just a visual representation in the charts of the markets climbing the wall of worry. And as soon as we got back to fresh highs here on Monday, this was when I was saying that we would probably see all-time highs within a few days, which we did today. Obviously had another little pullback when Trump said the meeting with Xi might not happen, but we generally found support on the backside of this downtrend that we broke out from. So yay TA for levels working. Anyway, the broader point with this is we're seeing market strength, and I just want to encourage you all to not short a bull market. Generally, it's harder in markets to make it as a bear, but if you're shorting in a bull market, you're just going to get wrecked. It's much easier to go with the flows. And just like when we're clearly in a bear market, you don't want to go aggressively long. Go with what the market is telling you, because it will be painful to be on the other side of that trade, losing money when there are all these opportunities out there. Now, if we switch over to the Nasdaq, you can see it is very much the same story on the Nasdaq. Actually, a bit more strength in the Nasdaq, closing slightly higher than the S&P 500. And you know what we should do? Going back to the S&P 500, I just wanted us to look at things on the weekly, because as we had that weekly bearish engulfing candle, we talked about all the instances of bearish engulfing candles and how the average path to recovery was 2 to 3 weeks before we saw a continuation of the uptrend. But this period here over the summer, at the end of July into early August, was an exception where we recovered right away the next week, and by the second week, we're already at fresh all-time highs. Well, that's exactly what we've done again here. And this is just showing that excessive strength and momentum in markets. I know this was a brutal pullback in some sectors and some portfolios were down 20%. But overall, we need to realize that the markets are strong and we should continue going with that flow. And I would not at all be surprised to see 7,500 on the S&P 500 within the next few months, let's say Q1 of next year. Okay, I'm going to start with semiconductors as the driver of the market. SMH closed at fresh all-time highs. If we go over to NVIDIA, this is the encouraging one because we did get a weekly candle close above that all-important $185 breakout zone. If we do look at the weekly, this is our second weekly close above that range. We did have quite the bearish candle, a bit of a reversal candle 2 weeks ago. Then this bearish candle, even a sell signal here on the confluence model. But closing back up above this range after 2 weekly closes fairly even at 183 and change is a good sign for continuation in this space. So just keep an eye on that. TSM is actually lagging behind a little bit, even though it had a bunch of momentum. But the real standout name is MU, Micron Technologies, breaking to fresh all-time highs. And this one really surprised me because the high that we hit on Monday, that was actually our 1618 extension. At first, I was thinking we would just hit the 100% fib extension here at 172. We made it to the 1618, which is the next most hit target. And now the question is, can we make it to the 2618, which would be a very lofty goal indeed. So let's bring in our fib extensions here on Micron. And I didn't draw it quite perfectly, but there we are. So you can see how we hit the 1618. Here's the 100% extension at 172. 1618 is at 215. We closed at 219. And the 2618 is all the way up at $284. So I think that's, what is that, like another 30% from here? That is 30.05% to the upside. So can Micron do it? Maybe. I wish I wouldn't have gotten out as soon. This thing has been on an impressive run, and it was one of the most undervalued semiconductor plays. Now it is getting up there to being appropriately valued. The dollar has not done much outside of chopping around sideways all week. So let's look at gold. And if we look at gold, you can see that very bearish pullback, bounce right off of 4,000. And as we said last week already, on Friday, that this is most likely marking a local top for gold. We got that confirmation on Tuesday of this week with the massive pullback. And the most likely path forward, I would say, is going to be a lot of chop and consolidation, most likely similar to what we saw in this period right here. Looking to Amazon, we have had a strong few days moving away from the 200-day moving average. If you want the full breakdown on Amazon, look at Monday's video, but I'm looking to enter a longer term position here. I had a limit order set down here at 206. I thought we might break down below the 200-day moving average a bit longer. It looks like that might not be happening, and I might have to chase on that entry. I was hoping for, honestly, even 200 or 190 if we really saw more of a correction. And if we're just looking at this local daily downtrend right here, we did close above that, and we had our 1, 2, 3, fourth time retest, and that breakout on the fourth time. You guys know I'm a fan of that. We haven't seen volume really follow through yet, but with earnings right around the corner, that could be the catalyst to send Amazon higher and eventually breaking the highs from February of this year at $243. PayPal, I do have a very small position in, like a fraction of a percent of my portfolio small. And after this rejection, the setup looked a little bit weaker. It's trying to recover right now and found a little bit of resistance at the 200-day moving average. So the question for PayPal, because if we zoom out to the weekly and see the broader chart structure, it does look constructive, but can earnings on Tuesday of next week be the catalyst to send us higher for this asset? it has definitely been beaten down for quite a long time and is way, way, way off of its 2021 highs, above $300. So can this one come back to life? We will see. But what I mean by constructive is we stopped this downtrend. We made a higher high. We made a higher low back in April. So can we now take a swing higher to make a higher high above this level here at $93? That is the big question for PayPal. And if you haven't gotten in yet, I would say there is still time. You could even wait for more of a confirmation. If you want to see this local swing at 79, let's say $80 broken, you could wait for that to happen and then look for that next higher low, which might come in, say, at the 200-day moving average. This will take some time to play out because that would put us all the way in January right there. Slow moving train, but could be an interesting one to watch for recovery. Okay, and since we touched on PayPal, we have to talk about the related asset XYZ or Block or Square. And this one might not look like it's doing much on the weekly outside of consolidating in this range, but compared to this low back here, we are still holding higher lows. And right now, since July, we have been in this flag pattern. So I have not entered a position yet, but we had a strong close to the week. And if we go into the daily, we can see this flag pattern shaping up on Block. And we have our lows here in May and just this horizontal range that is the basis for our flag. And the question is, can we break that to the upside? And if we're taking a measured move of this, just to give ourselves a price and time extension, we could do a fib extension, but I like doing these manually to give myself a sense of if this breaks out, where could that move take us to? And, to be conservative, let's go off the lows right there. And that would put us at a target of $109, which would give us that fresh high. And that would be in early January of next year. So if you're playing with options, doing your 100% extensions this way is nice because it gives you that time projection. And if we just want to show how that mirrors up with the fib extension, we're just drawing that in like that. You can see how that 100% extension falls at the same place. And then our 1618 would be at 132. Okay, Bitcoin on the daily. The positive news is that we're closing back in the Confluence Model Center Cloud. On this last daily candle here, we were looking very strong with these 3 green days off of the recent low from last Friday. But then Tuesday brought a very bearish candle for Bitcoin. We are starting to recover from that. Bitcoin and crypto broadly still have a lot of catching up to do, and they are still feeling the overhang from this market shaking event on the 10th. And I really want to see them catch up to the Nasdaq. So we've made a good early step with a couple of closes above this 108K pivot. But to really show some more strength, obviously we need to pass the 114 swing high right here from this day where we got rejected. But ultimately, breaking above 117,500, that would give me much more confidence that we are on the road to recovery and are going to see fresh all-time high prices. But we are also holding above the 200-day moving average. So that is a strong sign. Normally, I get much more into detail on the TA, but I think today it's worth just discussing the cycle. And James from InvestAnswers, who many of you might follow, today he made a whole video about the cycle extending. And I would suggest that it's just a bit early to call. If we are analyzing that 1,064 days, which most people consider the average of the last 2 cycles, there's a whole discussion on how you measure the first cycle, and that being 1,400, a little over 1,400 days, and being measured a bit differently. So should you average the cycles? Anyway, we don't have time to get into that, but the last 2 cycles were about 1,064 days from the low to the high. And now I measure the low on the 21st of November because that was when price made its ultimate low. Some people measure it from the FTX crash, and a lot of folks said, well, that puts us at the 1,064 days on the, I must be a day off on my start point. It landed on the 6th of October, which was right when we had our all-time high. So being zoomed out, it's hard to get things exact, but that landed right on our all-time high is the 1,064 days. So people who are in that camp are saying, oh, cycle is clearly over. We hit the high at the exact same mark, 1,064 days. Now, I would suggest we should go off the ultimate low on the 21st, which would have put the 1,064 days on the 20th. Oh gosh, my mouse is touchy. So just a couple of days ago. So we clearly didn't hit a high on the 20th, but to me, this is inconclusive. I think the way I would measure it, if I'm averaging all of the past 3 cycles, that would put us more in the 1,250, 1,280 day camp if we are going off of averages. But in either case, if we are saying the cycle is extending, I think the more measured way to do that is by saying, okay, our 1,064 day window fell within this time period in mid-October. And if we get a fresh all-time high, X number of days after that, it would be statistically probable that we are extending. And so for me, taking the average of that 1,064 days, I would like to see at least 6 weeks beyond these targets for fresh highs to say, okay, definitively the cycle is extending. And that would be on November 29th. So if we see a fresh all-time high past November 29th, I would at that juncture be confident to say the cycle does seem to be extending. Okay, moving on to Solana, and we are still holding our major area of support, which is coming in at the 200-day moving average, the Confluence Model Center Cloud. So that's been a good sign to see. We haven't really found a bunch of strength yet to move away from that zone, and these charts are really mirroring Bitcoin. One interesting thing I will note is that Bitcoin, Ethereum, and Solana, and I can't remember who it was on Patreon who mentioned this. No, it was Baha Rookie, who said they're moving in lockstep. Is that normal? And it's not always normal how much confluence we see in the price movements between these 3 assets. But it does mean that crypto is following the lead of Bitcoin right now, which is kind of the last sign of hope for alt season in a way, that if crypto is moving to a T with Bitcoin, that if Bitcoin runs, that could spur on something more meaningful for alts again. I don't think this correlation will last forever, but right now, all of crypto is really looking to Bitcoin. So if we're just looking at our overhead resistance, for Solana, we haven't broken our major overhead resistance yet, but if we go into the 4-hour just to assess, and let me tighten that up just a little bit, this recent downtrend, and we're drawing from here, connecting through all these lows, you can see that we actually broke this downtrend already and are on the upper part of it. So first sign of recovery, but we have a bit more work to do. And then if we're just zooming out to really see the broader trend on Solana, and on the daily, I'll note that mean reversion has deviated way down to the downside. So it does seem like crypto just needs some confidence to come back in, but a move further up does seem like the more likely path forward. But really, beyond this local recovery, I would encourage you all to draw this symmetrical triangle and watch this for a break one direction or the other, because then we can take a measured move and really get a sense of where we might be heading. And a break to the upside would be an exciting target. I'll just tease you with that for now, and you can measure it out for yourself at home if you are so inclined. Okay, MicroStrategy is doing a whole lot of nothing. The analysis hasn't changed since Monday. We're still on the same line of support for all intents and purposes. We have moved a few dollars, but look to Bitcoin. It's all about what Bitcoin's going to do to determine whether this is going to break down further or break to the upside. Okay, looking to Tesla, where we have been in this range, and after earnings, we had a drop to the bottom end of the range, then a massive day up yesterday on Thursday, and then a bit of a pullback today. But this massive reversal yesterday is notable. If you look at the past 12 instances where Tesla has had an over 5% pullback overnight, only to reclaim it the next day, 11 out of those 12 times, it has led to positive price action over the next 4 to 6 weeks. So that being the case, it would put the odds slightly in the favor of an upside break, but we ultimately need to see that close up above $450 to really get into positive gamma. The bands are still squeezing on the daily, and I actually took a little shorter expiry long call option for January of 2026, betting on that move to the upside. So if we break the bottom of this range, I will close my calls. And if we break to the upside, then I will hold those open and close those out most likely closer to the end of November. The one thing that is giving me just a little bit of pause on Tesla, if we bring up the daily RSI, we've had underside support on the daily RSI in this uptrend all the way since March of 2025 that we just broke underneath and now have been getting some resistance from. So this is one slight cause of concern, but Coinbase did something similar and has since reclaimed it. So this isn't necessarily the nail in the coffin, but it is something to be aware of. And you know what? Since I mentioned Coinbase, we'll just go to that right away. And this is what I was talking about right here with that breakdown of the daily RSI, where I got out of my calls that I had entered back here at around 295. And my rule was, as long as we were holding this RSI uptrend, I would stay in. And then when we broke below last week, I got out of my position on this rebound day. Then we pulled back a little bit more, thought I made the right call. Strong day today. Didn't necessarily meaningfully pass those previous highs, but I might have to chase this and get back in, particularly if crypto can run. I would say, generally speaking, the setup does look okay for Coinbase right now in terms of this being a base at 290 and higher high, higher low, higher high, higher low. Now we just need to see if this can prove it and make another higher high and eventually break into fresh all-time highs. And this underside support did turn into a bit of resistance for us on that last move. So there are some overhead hurdles, but Coinbase is looking decent. On the 4-hour, the mean reversion had fully reset on that last pullback, and we were getting support at the top of this previous consolidation range at around that $310 mark. So it is really respecting the levels and the TA pretty well. And until proven otherwise, I would say this bounce looks pretty strong, and hopefully we get a little pullback next week so I get a chance to get back in. But, that's just me being selfish. Charts are going to do what the charts are going to do. Okay, if we look to Robinhood, that pullback, I was hoping it would go just a little bit more to about 115 to get more of an entry. I have a pretty darn decent sized Robinhood position, but I would love to add to it. If we ever got back down to 107, I would really add a lot at that point. But anyway, the strength came back in. This chart for the last couple of weeks looks very similar to Coinbase. They are essentially moving in lockstep. Now, on the daily, we've been overextended for quite some time. What I was talking about, RSI down or uptrends breaking, there was a very steep uptrend on Robinhood here that broke, but then the price action has just continued to drift to the upside. We do have a little bit of a bearish divergence with the RSI printing slightly lower highs while the price is moving much higher, but the momentum is still in this, and it can keep running much longer than you think. Breaking this trend line underneath, that would be the first sign of a bit of weakness. But just for fun, I drew some fib extensions, treating this move from April and this consolidation as a flag, just to speculate on where that would take us if we had a 100% extension from that move. And the 100% extension would be all the way up at $183. So quite a bit up there. The 1618 would be at $238. So let's see what Robinhood can continue to do. I would love to see it cool off a little bit more, but when you're in a daily uptrend, the RSI on the daily has generally found support on 43 at around 43 for this asset when it's in a strong uptrend. So we bounced from right around that zone. And really for turnaround points, as long as the trend is persisting, your best guide is to go to the 4-hour. And the 4-hour did, just like back in August, give us that 4-hour reset on mean reversion and RSI, and price bounced away from there. So not much to do outside of go with the momentum in these names. Okay, one we haven't looked at in a while is Google. And if you've been following the channel for a while, you'll know that I got into a position here in the high $150 range after we started seeing this recovery in April. And I got rid of about half of my position in this zone right here as our RSI was getting extended and we were printing this mean reversion dot, just taking some off the table and also considering this massive gap up open that we had. And I have had an alert, not on this version of the chart, but on the GOOG chart, the class C instead of the class A. I've had an alert set at around, I had it set at 215. The gap up open, or I'm sorry, the gap to the downside is sitting closer to 211. But I thought that's, a probable area that if we saw a pullback, we would come into that. And for the last couple of months, since the beginning of September, since selling there, so I guess a month and a half really, I had been waiting to reload the rest of my position in that zone. But now it appears that this is more of a flag pattern that is breaking to the upside. So if we draw that there, and maybe we could just go into the 4-hour to get a little better picture of that and sharpen things up. So we're going off these lows here. Oh, we wicked down a little bit in after hours. Okay, so that's the bottom of our flag right there where we formed this base that wicked down. This is why we go into the 4-hour, because we want to see the after hours price action. I would say this is the top of the range, little wick up here last week, but we closed above the range. This is our first close above the range. So it's early days, but now we can project price targets to the upside. So if we go back to the daily, and again, instead of doing the fib extension, I'm going to do this manually to give us a price and a time extension for that 100% move, so we can think about the best options. And if we go off of that, we'll just copy and paste that, and I'll drop it off the low here. We're not seeing it on the daily, but if you recall in the 4-hour, that's where our wick went. So projecting this out to the upside, that would have us a price target of 348.72. Let's just say 350, easier to remember, by the 27th of March, 2026. So if you did want to take a shot at this with options, you could say, okay, I want to give myself a little bit of buffer beyond that. And you usually want to sell your contracts within 4 to 6 weeks of expiry to not start eating into the time value of your option. So perhaps you're saying, I'm going to get the May or the June calls to give yourself a little bit of buffer for 2026 and allow that move to play out. Now, if this does play out, we would want to see that price target hit a little bit faster than this previous move up, which was already fairly aggressive. If you start seeing the price move up and then deviate, showing some weakness and not move as quickly, that's just a sign of weakness to you. And you would want to consider getting out of this position a bit sooner before the price target if you see price deviate in terms of the time it's taking to get towards that target. Okay, moving on to HIMS. And just one quick aside on HIMS, because I mentioned in a previous video how when HIMS is in consolidation ranges, it's a dream to trade off of mean reversion and RSI. Just when RSI gets below 30 and we get mean reversion dots, I buy. When we get above 70 and we get mean reversion dots, I sell. And you can see how this is just rinse and repeat on these moves. But someone was saying that they are not getting the same RSI signals as I am. And I think that's because they might not be on extended trading hours. I'm always on extended trading hours to get the after hours price action, because pre and post market have some of the most interesting moves lately. And you can see if I just change the chart to be within regular trading hours, our RSI is not giving us signals. We're not getting mean reversion signals, not getting to the bottom of the range. So always, always, always have your chart on extended trading hours and be on a brokerage that lets you take advantage of those extended trading hours. Like I'm on Robinhood, no affiliation, but I am really happy with them. Anyway, I just got into a little position on a limit order on Wednesday of this week. We did deviate below this underside support trend line slightly, which gives me some concern, but we did bounce before the 200-day moving average. So I'm just holding this position right now. The one thing that's giving me a little bit of pause on the 1 hour, we hit the top end of the RSI already. Didn't quite get a mean reversion dot, but we did that without price moving meaningfully. So that causes me to then pivot over to the 4 hour chart. And I'm looking at the 4 hour and I'm saying, okay, we normally take 2 or 3 swings in the lower band, and we're getting that rejection after swing 1. Are we going to take one more move to the downside? And perhaps that has us finding support at the 200-day moving average, which would also be at the top of this range at around $45. That is possible. Even though we already have mean reversion dots on the 4 hour, it's something you have to be open to. And then maybe we see a more meaningful recovery from there. So keep your eyes on HIMS to see if it gives you that opportunity. But after the extreme move down last week, we should see some kind of equilibrium come back in after what I would say is an outsized reaction. Okay, speaking of outsized reactions, let's go to Deckers. Man, the transitions are just lining up beautifully. So if you recall, I got into a position a few weeks ago as we were starting to form a base and get close to these lows. And the earnings call yesterday, even though earnings were excessively positive, the Hoka brand grew 33% in the last quarter of reporting. UGG was up 15%. The only reason this stock dropped was because they said in Q2, they didn't realize tariff impacts yet in terms of really seeing that cost carried through. The forward projections were still quite positive, but the market reacted with an after-hours sell-off of almost 13% to the downside. So Deckers really got hurt on that. It seems like an overreaction to me, but you know, the market is voting with their dollars, so I have to go with that. I would have imagined that tariffs were already priced in this period, but let's see if this can recover. Because I think it's an overreaction and I believe in the thesis, I added just a little bit to my position today, and I will add more to my position if we come back down to about $81. And 81, I would say, is a very strong zone of support because it aligns with these previous highs back in May of 23 and where we found support right below the area where Deckers really took off to the all-time highs of $224. So keep your eyes on this one. If you're not in it, that $84 zone might provide some support. I was seeing if you could measure this as kind of a parallel channel. It's not really clean. So ignore this downside price target. I don't think that's really a valid projection. I'm really looking to that $84 zone. And if we're looking on the daily, we have mean reversion dots on the daily. RSI is oversold on the daily. Even on the weekly, we are printing now a bullish divergence on the weekly, where it was already oversold here. The weekly RSI is making higher highs while price is making lower highs. This is telling you it's getting close to a turnaround point, but it's still been very beat up. Okay, on a more positive note, and actually this one, my options on Circle more than made up for my losses on my Deckers options, which yesterday my Deckers calls were up 50%. Today they were down 53%. So things can change quickly in one day. But Circle, we had that third time retest of this downtrend, and then the events of the 10th happened. This pulled back. But even though that breakout failed, the thing that is showing you strength in this chart is that it was just hugging that downtrend so tightly. And we had a nice fourth time breakout today with a good move away. And it doesn't look like much on this chart because we're zoomed out, but that breakout move was 12% to the upside. And this is really encouraging to see on this breakout. We're getting a little bit of volume follow through. I would maybe love to see that continue next week with a bit increased spike, but still bigger volume than we have seen in recent history. And if we're going back to the daily chart, now we are into the Confluence model center cloud upper band here, right as the RSI is getting to the top of the range. Mean reversion still has a bit to go. So to me, this seems like it will most likely pull back a little bit next week and then attempt a move higher. And for this uptrend to continue, we really need to see these previous highs at 159 broken and then get above the 50%. And ultimately, we're still looking to that $204, $207, depending on how you measure it, price target. I was not completely accurate with how I drew the descending wedge here. So 205, 207, somewhere in that neighborhood. If you want a dramatic story from last week, this was just sitting on the side, but OKLO came down from almost $200, 194, all the way down to 113. So just a massive drop on this one. So be careful on these speculative names. Down 40%. And now having a nice bounce. I haven't really analyzed OKLO in a while, but I would be cautious on this one just for a head and shoulders watch right now, just because of how this is shaping up. If we get a right shoulder here, that could spell quite a bit of downside for OKLO. And actually that other shoulder forming up would align roughly with where earnings is coming in. So keep an eye out for this one, but maybe it'll just recover. But this is looking very toppy to me, if I had to guess. And that weekly candle, despite the little bit of buying bounce that came in, is not looking fantastic right now. And also the size of these candles, this just has all the signs of a blow off top. When you see massive candles like this, it's just telling you that that's not sustainable. And the generous view of this would be that we're just going to tighten up, but more likely there is more downside ahead, if I had to guess, despite broader markets being bullish. It's just like this got way too big for its britches. Okay, switching over to CRWV, and if you recall, I got out of my calls in this zone here after we printed the lower high and the lower low and had a bounce back into the 50%. Even though I think this can go higher, it was just showing some weakness. And we bounced a little bit before I thought we would, and I did not get a re-entry on this. Also, I was distracted with a lot of other things the last 2 days, but you can see where we did bounce was these previous highs, this little consolidation zone right in the middle there at 113. I was hoping for an entry a little bit closer to 105. Didn't quite get there. But now we have a new trend line that we can work off of. Need that third touch point to confirm it. So if we get a little bit of a pullback next week, I would be looking to re-enter this one. We do have earnings coming up on the 12th of November. Something to pay attention to. There is a lot of competition in the space. They have good partnerships, but I'm not building an outsized position in this. Maybe 1%, 2% of my portfolio for CRWV. Okay, one that I brought up on Monday that I was looking to for an entry and did not quite get the exact step I was looking for was AXON. And if we're looking at the downtrend here, we have 1, 2, 3 almost touch points, fourth time breakout. I was hoping for a little bit more of a pullback. We have an underside support line. If we're going out to the daily chart, that we can connect up that we didn't quite hit. So that comes in this neighborhood right here. And we got that turnaround on the daily with the buy signal just a little bit before that point, showing you that excessive strength. That's one mistake I have been making in this strong bull market. I am good at identifying turnarounds, but when the market is strong and buyers step in early, I don't always get my fills. So I missed that by just a little bit. I was hoping that we might get a pullback at the 200-day moving average or the Confluence Model Center Cloud. Doesn't look like that's the case. And so now if I do want to position in this, my hope is that maybe we come back and we retest that breakout for support. Maybe that comes in where the 200-day moving average will be, and maybe I'll get another shot at this. But overall, the chart is looking strong and like it wants to recover. Okay, ZS, not one I have really been watching much, but it is on our Patreon community watch list from some of the members. And as I was getting ready for this meeting, I noticed we had a breakout today. And this is forming a small little cup and handle pattern. So we can project off of this to see where that might go. And we'll just put that on right there. It's going to cover up our daily candle, but you know, we can live with that. And that would have a price target of $380 from the current $323, which to the upside would be an 18% gain. So if this is one that you're interested in being in, I haven't been tracking it. I don't know much about the fundamentals, but there is a little breakout play to be had there. The daily is getting to the top of the range, but it can definitely run further. We can assess the weekly too. The weekly has had, you know, a big mean reversion spike, but it looks like it wants to continue a little bit, and we're just taking that first swing in the upper band. So sometimes on these momentum plays, you know, it's like swing one, maybe we're going for swing two now, and maybe that's it, or it could take a third swing to fresh all-time highs. These things can stay elevated, just like we saw in Robinhood, longer than you think. Okay, a new one to pay attention to here is RNTX, Rain Therapeutics, and they are working on some cancer treatments. I don't normally play much in the pharma space or the biotech space, but since they are working on something a little bit more noteworthy like cancer treatments, I'll pay attention to it. And it looks like we are just getting a breakout of a very long weekly downtrend. We can go on to the daily to try to sharpen that up a little bit more to see exactly what's going on. And let's tighten that up to our price action. Oh, we're a little bit off here. All right. So again, we have our 1, 2, 3 with a little breakout attempt, fourth time, now closing the daily candle above it. We have room to run on the daily RSI. We don't have mean reversion yet. After a couple of swings, actually 3 swings in the lower band, we are breaking into the center band. So now I'm assuming we will get back into the upper band and recover. So RTNX, not too late for an entry. You know, we are a little bit off that $1.08 base. Now we're at $1.44 today. But if this comes in and backtests that for support before moving away, could be a decent move. And we are having earnings on the 14th of November. So that can always be a catalyst. And if we're looking on the 4-hour, even the 4-hour on this breakout, I like to see this on breakouts, still has room to move. Volume's starting to pick up a little bit. So, you know, biotech, definitely a riskier space, but one that has a decent amount of upside potential. And if we want to assume this is a falling wedge and we are measuring out what that potential price target to the upside could be, then we would do that off of today's breakout candle. We don't want to do it off the third retest because this is the actual confirmed one. Would put us at $2.84. So 100% gain roughly from here. Okay, looking to ICHR, which I have not mentioned too much, but if you have been following the channel for a while, you would know that I got into a position over the summer after this gap down on earnings, and I bought in this area at around the high $15 range. And the reason I bought was because there was a lot of government insider buying. So I'm like, what do they know? And also this is semiconductor adjacent. They make hydraulic cooling systems, and I forget the exact description, but it's an ingredient brand for cooling of semiconductors. So high demand sector and government insider buying, both good signs. And after that low in August, we've generally been in a strong uptrend, and we're just starting to get into resistance. And on the daily, you might say, gosh, Tom, you are terrible at drawing trend lines. Well, I'm drawing these off the 4-hour, to get that after hours price action and to really sharpen things up. That's where I always like to draw my trend lines. I just wanted to go to the daily to illustrate that we were getting into the upper band and starting to recover. So we have our major overhead resistance and our minor overhead resistance right here. And we're just coming into this for a third touch point. So if you're not in a position already, if we reject there, maybe that happens on earnings, and then we pull back a little bit and then break out, that next pullback could be a great entry. And broadly speaking, since that low in August, we have been on a good trajectory for recovery in terms of making higher lows, higher highs, strong uptrend. We do need to pass this previous peak here at 24 and change, which this would have us doing. And then we can try to break through that uptrend in a more meaningful way. And that would also help, if we have a little pullback, reset the 4-hour RSI. So if you see a pullback and we get a mean reversion dot, on mean reversion, the RSI gets to the bottom of the range, could be a great entry for ICHR. So I'm taking the route of just being a bit patient right now. And earnings are coming up on Friday, the 31st of October. So end of next week, we should know more in just a few days' time. And the last thing I'll say, my entry here was with options that are expiring early next year. So if we get that pullback, I would probably get in a spot position just to give myself a little bit more time with this to see it recover. Okay, moving on to a treasury play we haven't talked about in ages, ASST, which has been looking dead as a doornail. I sold puts on this back in this territory actually it was before that. It was in September when we were at around $4 that had a $3.20 credit. And I thought, okay, $5 puts with a $3.20 credit, $3.20 credit doesn't seem that high risk. Of course, this dropped down to sub $1. I got assigned those shares that are now underwater. And now I'm wondering if this is dead or if it can perhaps come back to life. And today was the first sign of that with a massive volume candle, which is the only reason I'm bringing this up. And we jumped from 74 cents yesterday to $1.10 at the close. Top to bottom, that move the last 2 days was a 60% move to the upside. So, if you would have gotten in on this on the lows, that would be quite something. I'm wondering, because we had this gap down, can this gap up on Monday and give us an island reversal? That would be a very bullish sign. But ASST, it might have one last hurrah. And if this can get me out above, I think I need it to get to $2.40 now to be profitable, somewhere around there. I would be happy to take those chips off the table, but let's see what it can do. Okay, last one is just a few chart requests from the Patreon and one or two from YouTube as well. This first one I didn't write down who put it in, but GEV. Oh, I'm sorry. I'm forgetting your username. Dr. something, but my apologies. All right, GEV. And I've not looked at any of these before. I don't know what they even do. But GEV has, I suppose if we're looking at on the 4-hour, let's go on the daily. You could argue after this massive move up, it's been cooling off, that this is a massive flag that we're seeing here. You could absolutely make that argument. Let's just look on the weekly. Gosh, this thing has been on a massive run. These kinds of charts scare me just because they can cool off. So all the way from 150 to 500 something. All right, let's just be generous. We'll assume this is a flag, although we don't have any confirmation yet, but we did see a good bounce from the Confluence model center cloud. Then we can map out what our 100% extension would be if this breaks to the upside. And we'll just map that out like that. That would have your 100% extension at $966, or your 1618 would be up at about $1,240. And if we go into the 4-hour just to see where we would need to break above to confirm that breakout, and the 4-hour is looking good just in terms of mean reversion dots, RSI back at the bottom of the range. You even have a little buy signal. We would just connect these couple of highs through here. That would be, near overside. And underside, you almost got a bit of a double bottom here at 530. It's good to see buying step in around that previous low. Lots of chop, not necessarily a clear trend, but if you know more about the business and the fundamentals and you believe in it and you want to take a swing early, maybe you could get in here, but really breaking to the upside would be the major sign of confirmation. But obviously that comes at the cost of higher prices. All right. Okay, from Bram is STKE, Soul Strategies. Oh, I have heard they're doing some really good things. Actually, NJ from Patreon, he went to one of their meetings in London and was really impressed and took a position despite them being very beat up and off their IPO prices. The volume candle we saw come in here and the mean reversion to the downside, RSI, all of that are good signs for a turnaround, and some whale must have really stepped in. Now, we aren't necessarily confirmed on a turnaround in an uptrend yet, and you might say, well, what the heck? This is making higher lows this whole way up. Yes, but it's also making lower highs. So all this is telling you on a very small time frame is after this spike up that was met by more selling demand, yes, there is a change in character that's worth paying attention to, but we are really just in a short time frame symmetrical triangle pattern right here, which looks like it's going to break imminently. So keep an eye on this, and if this can really prove itself and start making some higher highs and higher lows and begin picking up momentum, that would be a good sign. It's definitely worth one watching. I wish I could access it through my brokerage here. Unfortunately, I can't. But in terms of a risk to reward area, after being so beat up, around the $3 price point, when it was at, what was it at, $28 or something at the IPO price? I don't know actually what the IPO was, but it jumped up all the way. Oh my God, that wick is crazy. Up to almost $30. Oh, be careful with IPOs, please. Anyway, yeah, could be interesting, especially if Solana keeps running, but that's the big caveat. We need Solana to pick up momentum. Okay, next requests are from Jenna. She has ISRG, Intuitive Surgical. All right. Ooh, not even on, no, that is an earnings pop. I was going to say not even on earnings. Okay, big earnings pop. Let's, whenever I'm assessing assets for the first time, I like to zoom out to the weekly. Wonder if they're doing some kind of AI or robotics equipment for surgeries. That would be interesting. Okay, we obviously had a massive uptrend for weeks and weeks, really since 2022. And then a bigger pullback, not necessarily on earnings, but the weekly has reset and we got a weekly mean reversion dot. Gosh, the week before, look at that, mean reversion dot the week before that massive spike on earnings. The downtrend has broken. Now, that's a very impulsive weekly candle, good sign of strength. We are getting some resistance here on the Confluence model. Center cloud on the weekly. It feels like this is something that's going to have follow through. The question is, when do you get in? Because the daily is overheated now. I'm sure the 4 hour is overheated. We can actually sharpen this up a little bit on the daily. And if you get any pullbacks, maybe to retest this trend line break and bounce from there, that could be a decent entry to consider. Yeah, and it looks like something like that would make sense on the 4 hour too, just from how quickly it's expanded. If this comes back down, that would be about where the Confluence model center cloud would be for support. And then you could assume you're going to take another couple swings on the 4 hour. So man, showing strength, tough to decide on what to do with the entry now, because there is a chance it could pull back a little bit. If this is something you want to hold for years and years, maybe that's a different story. And I would sharpen this downtrend up on the 4 hour too, just so you get an exact point with that. And you know what? I'm just going to set an alert here at 514 at this VRVP cluster, just to keep an eye on it. I have too many positions I'm tracking anyways, but interesting change of character there. Okay, and one more for Jenna was RCAT, which Red Cat Holdings, I don't know what they do. When I read RCAT, I'm like, what kind of crypto is this? Ooh, okay, 4 hour definitely had a pullback, a little turnaround. Let's start again on the weekly. And if we're starting on the weekly, I really need to research these to see what they're doing. Okay, it's been a strong uptrend, big pullback, not necessarily earnings related. Let's go to the daily and see if we can map out any underside support. All right, let me tighten this up just a little bit on the underside support. Actually, no, that is where we want to be. So we have our major underside support, and then we can go off this next trend right here. You know, things are extended on the daily, but you bounced right from support. So since you are oversold on the 4-hour and you got that turnaround signal, and you also broke above this downtrend on the 4-hour, which let's just expand that a little bit so we can see that a bit better. So that downtrend broke to the upside. So depending on what they do, I know nothing about them, or if you got in it, you could play this, and you know, you do want to be careful to see if at $14 you'll find some resistance and just make a lower high. But this does seem like on the 4-hour, it does have some room to run. And from where we're at $11, you know, that's not a bad move. Let's see. So from where we are here, that would have us, 24% to the upside. If you nailed the breakout, that would have been even more meaningful. That would have been 40% to the upside. So this thing is moving like crazy. It's volatile. So just be careful, have your stops in play. And at least with this major underside support on this uptrend right here, you have a clear area to set your stop. So if this does pull back a little bit, say we bounce from the center cloud, could be a safer entry because then you don't have as much downside exposure to that area where you set your stop. So something to think about. But Jenna, good job spotting assets with decent entries on the charts. That's cool to see. Okay, last one from Drew is NBIS. I haven't looked at them in a few weeks. This one has come up before. It seems to be one of the retail darlings. All right, if we're looking at it on the weekly, size cooling off with that move down. Hidden bearish divergence, so not that bad. Hidden bearish divergence is when the RSI is making even highs while the price is running higher. Not as much of a concern to me as a traditional bearish divergence. So we have our major underside support here, and then we have accelerated away from that. So we only have 2 touch points, but you could speculate that this is now a trend line that's potentially giving you support here on the daily. And if we do go to the weekly, just to see, okay, this did have a fresh all-time high breakout. Let's just compress some of the price action. Yep, since the IPO, we broke these previous highs. So it's been on this strong move, obviously going vertical and way extended here on the weekly mean reversion. Geez, 3.5. Don't often see that on the weekly. So be careful. This has had a meaningful run already. We're still, you know, potentially respecting this uptrend or this lower uptrend, but have your stops in play at these levels to get out. And on the daily, we did now complete, you could say, 3 swings in the upper band. We just broke back into the center band, having a bounce away. There is a chance this could fail and still break down. Be careful. I don't know what they do, but the chart is very extended. So that is it for the charts. We really do need to see crypto pick up some momentum soon to catch up to the Nasdaq. I feel like I've been saying this every Friday for the last month, but I'm really watching the weekly close for Bitcoin. As for the broader markets, we are getting into the heart of tech earnings season next week with Apple, Microsoft, Amazon, Meta, and Alphabet all reporting. Also, there are many other solid mid-caps reporting next week that are very much worth monitoring. Generally, the setup does look solid for the broader markets, but we may see some earnings-related and FOMC-related volatility. Just like Wednesday of this week when we got a pullback, I'm treating any down days that we see in the next week as buying opportunities to deploy any more capital that I have sitting on the sidelines. That said, I do always encourage you guys to make a plan. For me, that looks like, for my trading portfolio, just outlining roughly how much I want to have allocated to each sector so I don't get too overweight in any one side of the market to mitigate risk a little bit that way. So anyway, if you are keen to join that chart chat session that I have tomorrow, again, the link is in the description down below. Would love to see you in there. That aside, a big thank you to everyone in Patreon for making this all possible. I truly appreciate every one of you guys. I hope you all have a great weekend. Bye for now.